Like and subscribe and click the bell icon to get new video updates.
Twitter offers Elon Musk board seat, as in Wall Street fall on fears rate rises could lead to recession. Twitter has offered billionaire Elon Musk a seat on its board after the Tesla founder bought a big stake in the social media firm, and U.S. stocks have fallen. The Nasdaq fell 2.3% to 14,204. The Dow Jones Index lost 0.8% to 34,641 and the S&P 500 fell 1.3% to 4,525. The FTSE 100 Index rose 0.7% to 7,614. The DAX in Germany fell 0.7% to 14,424. And the CAC 40 fell 1.3% to 6,645. Mr. Musk disclosed yesterday in a regulatory filing that he had bought a 9.2% stake in Twitter in March, making him the company's largest shareholder. His nearly $3 billion investment is 4 times larger than that of Twitter founder Jack Dorsey, who stepped down as chief executive in November. Twitter's chief executive Parag Agrawal said in a tweet that in conversations with Mr. Musk in recent weeks it became clear to us that he would bring great value to our board. He is both a passionate believer and intense critic of the service, which is exactly what we need on Twitter, and in the boardroom, to make us stronger in the long term, Mr. Agrawal tweeted. Mr. Musk tweeted that he was looking forward to working with the Twitter board to make significant improvements to Twitter in coming months. Reuters reported that Mr. Musk would be involved in strategic decisions, including the direction of Twitter's Bluesky project and the addition of an edit button, which he set up a poll on Twitter for users to vote on. But Mr. Agrawal warned users to think carefully about the addition of an edit function. Mr. Musk will not have a say on the platform's moderation, including what speech gets banned or whose accounts get restored, a policy that applies to all board members. Bluesky is a company funded by Twitter to develop a new operating standard for social media. Twitter shares rose 2%, following yesterday's 27% surge on the news of Mr. Musk's investment. As follows: Wall Street lower. The local share market opened in the red after U.S. stocks slumped on fears that rapid rises in official U.S. interest rates could cause a recession in North America. At 10:15 a.m. EST, the All Ordinaries Index fell 1%, to 7,754, while the AS200 Index dropped 1% as well, to 7,453, with all sectors in the red. Miners, utilities, and technology stocks were among the worst hit. Leading the falls in early trade were battery materials firm Novonix, minus 4.5%, nickel firm Leontown Resources, minus 4%, and rare earths miner Lynas Rare Earths, minus 3.9%. The best performers were medical device firm Polynovo, plus 7.4%, on record first quarter revenue, transport company Kelgen Group, plus 2.5%, and coal miner Whitehaven Coal, plus 2.4%. The European Union is proposing a potential ban on Russian coal imports because of the invasion of Ukraine. BGH Capital raised its takeover bid for IVF provider Virtus Health, plus 0.6%, to $8 a share. At 10:30 a.m. EST, the Australian dollar was buying around 75.90 US cents, up 0.15%. It surged to 76.61 US cents overnight after the Reserve Bank signaled it was getting ready to raise official interest rates. Crown facing $100 million fine. Victoria's gaming regulator has started disciplinary action against Crown for allowing Chinese high rollers to use a Chinese bank card, China Union Pay, to bypass that country's currency restrictions. The Victorian Royal Commission into Crown found that the casino group had assisted Chinese high rollers to illegally transfer up to $160 million in funds out of China. It found that Crown was not fit to hold a casino license, but recommended that Crown be allowed to keep its license under strict conditions. That scheme had worked, the Commission found, because Crown's hotel in Melbourne issued a room charge bill to the patron, which falsely stated that the hotel provided services. The customer would then pay their bill using the China Union Pay card and be given a voucher which would be exchanged for cash or chips at the casino. Crown could face a fine of up to $100 million. Fran Thorne, the chair of the Victorian Gambling and Casino Control Commission, said she welcomed tougher laws that imposed stronger regulatory obligations on Crown and gave the Commission greater enforcement powers. These powers are needed to deter Crown from engaging in the conduct that was revealed during the Royal Commission. As a first step, we are acting on the Royal Commission's findings that Crown's China Union Pay process breached important Victorian regulatory obligations, was illegal and constituted serious misconduct, she said. In a statement, Crown said it would fully cooperate with the Commission. Crown's shares fell 0.3% in early trade. U.S. stocks on Wall Street lost ground overnight, pulled down by technology and other growth stocks after comments from U.S. central bank officials prompted fears that aggressive interest rate rises could cause a recession.